So once you take away the global policeman, you're going to leave yourself with chaos. And that's happened every time empires have shifted. You leave vacuums, and power vacuums create somebody else filling the power. In terms of the bond market, there is a 35-year channel I call the chart of truth, where 10-year bond yields go up and down in this regression channel. And when you get to the top of the channel, it's usually the end of the cycle.
Raoul Pal says that this Russian-Ukraine war is so predictable, which one could have easily seen it coming. By comparing to the historical events, such as the controversy surrounding the political status of Taiwan, which is a result of the Chinese Civil War, and the subsequent split of China into the two present-day self-governing entities of the People's Republic of China, which is China, and the Republic of China, which is Taiwan. This clearly indicates that China may invade on Taiwan in the near future, like what's happening with Russia and Ukraine. But what are its effects, which one could have not predicted? Stick until the end to know its full effects. Let's hear it from Raoul. Russia's invasion of Ukraine has exposed the deep fault lines in the global economic system by making realize that US dollar is not an asset. By freezing half of Russia's foreign exchange reserve, the West has declared economic war with central bank assets as the target.
If you go back in the history books and see even the recent history of what's been happening between Russia and Ukraine for a long period of time, you've seen that this is coming. And the Russians have flagged it for a long time. So it happens, and it's a shocking event for everybody and a very sad event, but it wasn't unforecast. There was no black swan. We kind of knew it was coming. Like we kind of know that China is going to overtake Taiwan at some point. It's just a matter of when. So yes, the asset markets have reacted a lot to it because of the incredibly strict sanctions that are being imposed. And that in itself was a really interesting development. Outside of the machinations of war and how this plays out, what the Russians actually do, what do they want, something bigger is also happening, and it's kind of another fourth turning moment. And that is the fact that we've forced a large country to realize that US dollars are not an asset because they can be taken away in terms of usage. Okay, that's a big shock to everybody, including the Chinese, the Indians, or anybody else, the Saudis, anybody. It actually accelerates the trend of the bifurcation of the world, moving away from the US as the large hegemony and into this world where people have to avoid the dollar over time. And we can talk about this later. It's actually probably a very dollar positive thing in the meantime. But that is one massive fourth turning shift, which is the change of the rules-based global order system. And we can see that being fought out with NATO as well, which is part of the rules-based global order construct that came out of World War II, and trying to see what NATO can do. Can NATO do anything? And if it doesn't, it again strengthens others to do what they want. We've seen that trend when Trump moved out of globalization, said we don't want to be interventionist. Well, we saw Saudi assassinate a journalist. We saw the Turks assassinating people. We saw China doing more of what they wanted and Russia being more aggressive.
Russia has amassed $640 billion in forex reserves, but now finds itself left with only gold and assets in other denominations. It leaves us with questions that how safe are the developed countries as investment destinations for foreign currency? Drop your views in the comments section. Now, if you're asked to invest in one between gold and cryptocurrencies, which one would you prefer? To be honest, I'm pretty sure that I'll say crypto for life. Who cares about gold when your crypto portfolio is making 10 times to 20 times returns over the past 5 years? Jokes aside, Raoul prefers Bitcoin and other cryptocurrencies over gold. Why? He compares the stats of gold with 10-year bond yields performance and the yield curve. Let's hear it from the man himself.
Gold is pretty straightforward. It trades like shit, but over time, there is a very strong case for other central banks to increase their reserves in gold because of the fact that gold is nobody's liability and the dollar now clearly is. So I think that creates a secular backdrop. The other outcome, I think, that if I'm right about global economic weakness coming, there will be more monetary stimulus but maybe in clever ways, i.e. handing it out to people who can't afford their electricity bills, but it's still the same bloody thing. Or yield curve control, still the same thing. So that debasement of the denominator, the value of fiat currency, means that gold automatically rises. So I'm pretty positive gold, but it just doesn't trade well. It's kind of weird. It keeps trying to break higher and then fails, and tries to break higher and fails. So that keeps me from being very allocated towards it. And I think, cryptocurrencies are actually a much better bet for this. I've just put out a tweet thread about this morning is, at the end of the cycle, yields are lower every time because more debt gets added to the economy every time yields go down. So therefore, a smaller rise in yields breaks the economy and things slow down. And also demographic demand. As the population ages, they tend to buy more bonds because it gives them security in retirement. That's another big factor. Demographics tend to slow down the trend rate of growth. So that brings that. So this chart is a meaningful thing. It's not just a chart of an asset. It's actually a big secular framework of understanding of where the world is. So we're right at the top, poking through the top of the channel. We poked through in 2018 and everyone said inflation's going to 6%. What happened was growth started falling. And usually the yield curve inverts when that chart is at its peak. And that's exactly what's happening now. So this looks like every single other cycle I've ever seen, where everybody gets excited about breaking the channel. Everyone goes, everything's changed. The yield curve inverts and everyone goes, forget the yield curve. It doesn't mean anything. And it plays out. So I'm, more of a buyer than bonds. I bought some call options on bonds, but I will probably over the next few months look, because I think growth means lower yield. If I'm right that bond yields start to go down soon and peak inflation fear is in, well, that's what's beaten down all the tech stocks. Peak inflation fear, and probably the same with crypto too, because long duration assets tend to do less well. So we should see those at the margin start to outperform, and we're starting to see evidence of that.
As you see, Raoul prefers cryptocurrencies rather than gold because gold doesn't trade well. If you see the 10-year bond yield performance, when the chart is at its peak, then the yield curve inverts. Under the YCC, the Fed pledged to buy enough long-term bonds to keep the rate from rising above its target to control interest rates along some portion of the yield curve. The peak inflation fear resulting from events such as the US CPI hit a new post-1982 high of 7% in December 2021, may affect the prices of bond yield in a negative way. As US controlled yield curve in 1940s, Japan did it in 2016 and Australia in 2020. Raoul says that to control inflation, the best way is to control the yield curve. So it's obvious fear of interest rate hikes and the record high inflation rate, 8.5% this year, causes the investors to panic and creates the sell-off in the market. According to my view, I see that the markets will be going down for the next few weeks. Hope you enjoyed the video. Subscribe to our channel and hit the bell icon. Create your supreme wealth by making better investment decisions. That's all for today. See you in the next video.